Hey friends, hope you're doing well. Hope you're having a great 2024. After Mexico City, I went to Hawaii, Honolulu for a while. Love it there. And now I am back in the Philippines, a little bit more affordable, visiting some friends in Manila. I thought I would just do a quick video. So this is going to be a slightly different strategy than stuff I've shown before. I mostly sell options. I think there's a really good edge there. This is a swing trading strategy on stock, so it's purely directional. We're not going to be using options. And this is something I do from time to time. Now, while I'm sharing this strategy, and this is something that I like doing, I'm just sharing my journey. I'm not a financial advisor. I'm not suggesting that you trade this way. Consider what your own situation is and what makes sense for you. But this is something that I do. Now, when I started learning directional trading, I read hundreds of trading books that would share some sort of a strategy with a couple of indicators, and they would talk about like, oh, when the stochastics cross over in this way, and that's when you get long. And they'd show a couple of charts and say, oh, look here, here's a couple examples where it worked, right? And then I would backtest the strategies, and they had no edge. And this happened over and over again. Now, eventually, I did find a couple of strategies where, just based on the rules themselves, without discretion, there seemed to be a statistical edge historically, right? And as with finance in general, right, past results are no guarantee of future performance, but, I'd rather see positive past results than not. And for most of the strategies where I did find a statistical edge, there was one real common theme, and that was that those were strategies where the authors themselves had also done statistical tests across hundreds of trades and shared those results in the book alongside the strategy. So if you find a book that is describing some strategy in a purely technical way and it doesn't have those kinds of statistics, I would just, frankly, not waste your time on it. Now, I do think there's room for discretionary trading. Most traders are discretionary. You can make a lot of money that way. You can learn price action trading. You can learn market feel, and that's fine. I'm not here to diss on it, but this strategy is a purely stats-based strategy. Anyway, among those authors who are stats-minded, two of my favorites are a duo named Larry Connors and Cesar Alvarez. Cesar used to work at Microsoft on the Excel team. He partnered up with Larry, a very famous trader who's been around for a long time. Now, this is the book that the strategy I'm talking about today came out of, Bollinger Band's Trading Strategies That Work by Larry Connors and Cesar Alvarez. It came out quite a while ago. My back test included a period of time after it was published, and I still saw an edge. That's something else I really like to see. You can buy it on Amazon. You can also probably get it from Trading Markets, the publisher. This is Larry Connor's company. This is Cesar Alvarez's company now, Tranquility Trading, and he's got a blog, some great information on here. He also teaches people how to do backtesting, if that's interesting to you. And the two of them came up with a variety of strategies, but they all kind of had a common theme to them. And what that was is you would have a stock of some sort. So this is 1-800-Flowers, and it's in an uptrend, right? And then within the uptrend, you have these pullbacks. So it's in an uptrend, but you have a strong pullback, multiple days. And then what they would do is they would look to get in with a limit order some amount below the market the following day. So you've already got a pullback, you get even more selling. So everybody's selling. And they wouldn't wait for confirmation. They would just have their limit order and get taken into the trade automatically. And then they would look to get out on strength or getting back to a fair price. So almost all of their strategies have that kind of a feel to them. But for this one, the basic idea is the uptrend definition is just that the stock is above the 200-day simple moving average, as you can see here, 1-800-Flowers is. And then the multiple day sell-off is just that for 3 days, we had a close below the lower Bollinger Band, but this is a 5-period, 1 standard deviation Bollinger Band. Now, there are a couple of other criteria I'll mention as well, but in their book on this Bollinger Band strategy, they actually looked at a lot of different combinations of how many days below, what kind of limit order to use, that kind of thing. And there are lots of trade-offs there in terms of what your average return per trade is, maybe you'll accept a lower return per trade because you want a higher trade count, right? And that kind of stuff. And those are trade-offs that you can make using the results that they published in their book. So I'm just showing one set of parameters that I happen to be using. Yeah, so this one I would look to get in, and I like to use a 10% limit order, which sounds like a lot, and it is. It very rarely triggers, but the idea is if the stock crashes 10% during market hours, then I'm going to look to get in at that level, and I'm going to have a limit order ready to go. And then for the exit, I'm going to exit on the close if the market is closing above the upper Bollinger Band. Another way of saying that is the Bollinger percent B is above 100. These Bollinger Bands and where the price is kind of reflected in this Bollinger Band percent B indicator down here, which is also a 5-period 1 standard deviation indicator. So it sounds more complicated than it is, but basically 3 days below, 10% sell off, I buy. And then getting into the close, if it's above the upper Bollinger Band, then I sell. Okay, so to find them without spending a whole lot of time, I like to use a scanner. And since I have ThinkOrSwim, I use ThinkOrSwim as my scanner. So a few of these are just around tradability, I guess I would say. So the minimum price I want on a stock is $5. If it's a $1 stock, it's just things get really painful in terms of slippage. Same thing with average volume. 21-period simple moving average of the volume is at least 250,000. That means that enough shares trade that it's really liquid, so we can get in and out without too much slippage. Historical volatility, 100-day, is at least 30%, or 0.3 in ThinkOrSwim terms. This just means this is a stock that can move a lot. When we're swing trading, we want enough movement to make, we don't want to be pulling like 5 cents out of this trade because commission will kill us, right? So that's all that's for. He likes the 10-day ADX to be at least 30. This ADX is like a trend strength indicator. So not only are we in an uptrend, but it's a reasonably strong uptrend. So the wind is at our back, and that's just another way of looking for that. Then you can't see the whole thing here, but this is just looking for that percent B indicator to be below 0 3 days in a row. It's all hidden in this ... But if we look back at the chart, this bottom one, this is percent B. And like I said, this indicator and the price in relation to these Bollinger Bands, it's kind of the same thing, right? So you can see this is a 5-period plus or minus 1 standard deviation percent B Bollinger indicator. And if you look at this light blue number right here, the last 3 bars are all below 0. So minus 1.9, minus 33, minus 34. So it's 3 bars in a row below 0. That's 3 closes below that lower purple line. It's the same, I'm saying the same thing, even though they're different indicators. So that's what that is. And then the close price, is the simple moving average is less than the close price, which is the same as saying the close price is above the 200-day simple moving average. And that just means that yes, we're in an uptrend, right? And we also had that ADX being high. So I run the scan, and here is my set of results. Now I want to enter any of these 10% below the close price. It's midday in Manila, so we're after hours. The US market's not open right now. So these are the close prices. And what I do from here is I save this off to a watch list. So I'm going to come over here. I'm going to say save as watch list. So here's my watch list right here. And one of the things that I'll do with this list is I will look for something called an ADR. ADR means it's a foreign stock that has a proxy listed on the US exchange. So an example would be Sony. Sony is a Japanese company, very big company. They have a US listed ADR that allows US investors to participate in ownership in Sony, even though Sony is really listed on the Tokyo Stock Exchange. It's almost like an ETF or something in a weird kind of way. I don't like trading ADRs with this strategy, so if I see an ADR, I knock it off the list. Okay, so for this, what I do is I sort by symbol in the watch list, and these are the scan results here, and I just like to look at the name. So most ADRs are really easy to spot because they'll just say ADR right in the name. So that's the first thing I look for is ADRs. The second thing that I look for, I probably won't have an example of today, but I will step through each of these on the list, and what I'm looking for over here is bad data. And what bad data will look like is the price will just suddenly jump, like up or down 50, 100, 200%, with no catalyst, no earnings report, no stock split, nothing. And that usually means there actually was a stock split, but the broker forgot to enter it in their system. And so the chart is not being split adjusted. That means that all the indicators are completely unreliable, and I just take it off the list. Once you have this list, there's a couple of things you can do. If you are in the US and you're watching the market during the day, or if you're in a good time zone for it, then you can just keep this watch list up and have like a percent change column. And when you see something has gotten beat down like 5 or 6% in the watch list, then you want to go and look at it and go, okay, what's 10% down? What do I want my order to be? And the nice thing about that is you can be kind of selective and maybe put on a bit more size and pick out the ones that are actually hitting. But if you can't watch it live for whatever reason, then, which is what I'm doing because I'm in Asia, so the market opens at 10:30 p.m. here, and then it runs until like 5 in the morning. I am not gonna I'm not gonna do that, sorry. So what I do is I put in limit orders for all of them, or all of the ones that I'm interested in, and I put the limit order in 10% below the market. So if it hits the limit order, it'll fill. If it doesn't, it doesn't. At this point, I like to pull the list into Excel. And to do that, first I want to export it as a CSV. So you can get to it here under export to file. Right now I've already done this, but you can save it as a CSV. Once you have the CSV, I go into Excel and I open it, and it pops up this import wizard, right? And it's going to be comma delimited. CSV is comma separated value. So comma delimited, I hit next, and then I want to hit comma. And notice when I hit comma how this actually jumps into what I actually want to see, right? So here's my watch list. You can see I got the little name up here. Now I also have a spreadsheet that I use to help me with the orders. And this is from a previous time that I did this, but yeah, I just copy over to the ask. So I want to replace this with my new values. So to do that, I just come in here and I like to drag from the name, and I just go over to the ask. And I'm going to copy those, and I'm going to click on the name on this spreadsheet, and I'm going to paste, and they all drop in. Now see, from 19 on, these are the old ones. I don't want those. And what I have here is, these are my tickers. This data all came from ThinkOrSwim just now, but then I have a column here that's calculated. And what this is doing is it's going 10% below the last price. So I want to have, the rule is we've got a 3-day sell-off on the Bollinger Bands, and then we want to buy 10% below that final close price. So that's that 10% below value that I'm going to want. So that's where I want my limit order to be. And then this is also a calculated column. You'll have seen something like this in maybe my other videos, but I'm constructing this text, this by some quantity, ticker, at price, limit order. This you can paste into ThinkOrSwim and it'll generate the order for you. So I'm not going to have to go in and like tweak the values or pull out a calculator or do anything like that. These are all of the orders that I want to send to ThinkOrSwim. Nice and easy. And I can set this target amount value to whatever I want. So I can do like 3,000, I can do 7,000, whatever I want to put in per trade that I'm putting on. So here I have 14 stocks that I could put orders in for. The number of stocks is going to vary, and some days there won't be any. And there are a couple ways you could handle that. So one thing you could do is you could say, okay, I only want to put in up to 10. I'm willing to risk, maybe it's $2,000 per position, so that's $20,000 maximum allocated across all of them. But you have more than 10. So what you could do, I added a beta column in that original watch list, and this is like how volatile the stock is. So you could sort by higher beta on a stock. You could also sort by, you could have used price earnings, and you could have a fundamental price earnings sort be how you pick the top 10 candidates out of in this case, the 14 of them. The other thing you could do is, for any reasonable number, you could just cut the amount down. Maybe normally you're doing 2,000, but then, we have 14 stocks, so you do 1,400, all right? And now you're still risking 20,000 total across all of them. And most of these are not going to fill, by the way, right? We're going to put these orders in. Maybe one of them or two of them will crash 10%. So, but then as I've shown in other videos, we can actually paste these orders into ThinkOrSwim. Now I can only do 8 at a time, so I'm going to copy 8 of them. Now on Windows, you can copy and then you can paste directly into ThinkOrSwim. But if you're using a Mac, and I happen to be on one right now, copying out of Excel copies some formatting information along with it, which causes problems. So instead, we have to paste it into a text editor and then copy it again, and then we can paste it into ThinkOrSwim. It's annoying, but that's just how it is. Right, so I open the order entry, I delete any order that might be in there, and I want to pick Blast All on this drop down because I'm just sending all of the orders. And you see this little paste icon. If I just click that, boom, there's my 8 orders. Quantities are already set. I can't quite see them. If I'm going to do there we go. So you can see the quantities are all already set. The prices are already set. Good to go. Day order. Confirm and send. Off we go. So that was 8, and we got 6 more. So I'm going to copy those, paste it into my text editor, copy it again, set ThinkOrSwim to Blast All, paste, confirm and send, boom, done. Okay. So now I can go out. I can go have dinner with my friends, maybe we can meet up at the pub for a beer afterwards, and I don't have to worry. I'm not stuck in my hotel room at 10:30 at night in case one of these triggers, which won't even happen most nights, right? So that takes care of the entry, but what about the exit? Well, let's say that one of these triggered, right? So let's say we ended up in 100 shares of this TK stock and we were looking to exit. Well, we want to exit on the close if it closes above this red line, or another way of putting that is if the Bollinger %B is at or above 100 going into the close. And again, if you're in the US and you're able to watch the market during hours, then you could just monitor for that exit condition around 3:50 p.m. or so. If it looks like you're above that line, then put in your order to close and get out. But I am in the Philippines. That's 5 o'clock in the morning. I don't feel like getting up at 5 a.m. I'm not a morning person. Spoiler alert. So what I would do is I would enter the close order with a conditional, and ThinkOrSwim lets you do that. So I'm going to sell. Let's just pretend I've got 100 shares of TK. You bring up an order box like this, as if you're going to sell, and it's outside market hours. This is 2 p.m. in Manila. Doesn't matter. Over here, you see this gear icon. You can click that, and it brings up this conditional order box. So I can add extra conditions on it. So I can say, okay, actually, I want to submit this order at 3:45 p.m. You need the extra 2 zeros here, just so you know. So I'm going to say, at 3:45 p.m., that's close to, we can't do the actual close because then it's too late to submit an order, right? So I want to give it a little time to fill. So 15 minutes before the close, and I'm going to add a condition. I just clicked on the line and it just popped in TK. I'm going to say study, and I'm going to say edit. And then I'm going to say edit again. ThinkOrSwim is kind of annoying because I'm going to say study again. And then I'm going to come down to Bollinger %B. And I'm not going to take the default, so I'm taking 5 minus 1 and 1, and then greater than or equal to a value of 100. So that's our exit condition that I'm using. Like I said, if you read his book, you will see a variety of different ways of exiting the trade with different trade-offs. But for today's example, that's what we'll do. Now, the other thing that I have to do is change the price. I don't want to just use this 859. I do want a limit order, but I'm just going to say use the last price. So when this triggers, so at the end of the day, if we're above the upper Bollinger Band, it's going to trigger. It's going to take that last price, whatever it was, and it's going to put in a limit order at that price. And it's got 15 minutes, so hopefully that will fill. right? And then if I hit save, now you can see the price just says this plus or minus 0, right? So that condition is in. And if I'm not going to submit this because I don't actually have a position on TK, but if I confirm and send, this order would go in and would sit in the market. ThinkOrSwim would hold it off the exchange until 3:45, and then it would monitor for your exit conditions for you. And if your exit condition happens, it would send the order off into the close. And that would be that. Now, one thing you might have noticed is there was no stop loss, and that can surprise people. In the testing they did on the strategy, if you tried to add a stop loss to the strategy, your average return on capital went down. And I had the same result when I tested it. You can add a stop loss if you want, but I prefer not to. So instead of managing risk by having a stop loss and having maybe a larger position, if I'm willing to risk, let's say $1,000 on a trade, that's $1,000 on the position. And that's my position size. That's just how it is. So that can turn people off. That's totally fine. Like I said, I'm not saying you should trade the way I trade, but it's totally fine to trade without a stop loss if your position size is small enough that you're managing your risk that way. Anyway, I'm gonna ship these orders, and tomorrow I will see if any of them filled. So just to show an example of one of these that I actually did with real money. So this is XRX, which is Xerox. And it was in an uptrend. It was above the 200-day moving average. We had these 3 days closing below the lower band, and I put an order in 10% below, limit order, and I didn't have to watch the market or anything. The market actually did crash on XRX. I got filled right here, and then every day I was putting in that conditional order. And this one I ended up stuck in for quite a while. So it's kind of annoying to have to put in that order every day, but eventually, going into the close, it was above the upper Bollinger Band, and that conditional triggered, and the trade closed out. This isn't necessarily what you might be used to seeing a strategy look like, but there's a lot to it. These kind of heavy crash scenarios after a sell-off, like there are no buyers. And when everybody is selling, the idea is, that's obviously when it's a good time to be the buyer. Just a supply and demand, because supply and demand will eventually normalize, and then pricing will tend to be more favorable for you. The nice thing about the 10% down, if you're not aware, in the US markets, a 10% drop triggers a short sale restriction rule, which means you can no longer short that stock unless you get an uptick. So there's a kind of a natural disconnect on a 10% crash down. So that's why I kind of like that entry. But so just sharing something else that I do in my trading. Not advice for you. I'm not a financial advisor, but if you're interested to follow my journey and how things go for me in 2024, then like, subscribe, and I will see you in the next one. Peace.